Good morning and welcome back to the Market News Daily Podcast. I'm your host, and today is Tuesday, July 21st, 2026. Let's dive right in because today is a heavy one. If you wanted a one-sentence summary of what is happening in the markets right now, it would be this: the AI infrastructure build-out is accelerating faster than anyone expected, the chip narrative is fraying at the edges for some incumbents, and across the broader market, technical signals are sounding a rare and loud warning. 38 bearish signals against just 12 bullish across more than 10,000 analyzed symbols. That is an overwhelmingly one-sided reading. We will come back to what that means, but first, let's walk through the stories that deserve your attention today. The biggest headline of the day lands squarely in artificial intelligence and semiconductors. Nvidia's next-generation Vera Rubin chips have officially entered full production. That is not a pilot program, not a limited ramp, this is full production mode, and it underscores exactly how aggressively the AI capex cycle is accelerating. The data center GPU build-out is moving from experimental capital projects to industrial-scale infrastructure, and Nvidia is sitting at the center of it all. There is another development around Nvidia that might not get as much airtime but is worth paying attention to. Nvidia's stake in Nebius has been signaling deepening ties with a rising crop of AI infrastructure players. Nebius itself surged on the news, and it is a reminder that the ecosystem around large model training and inference is growing faster than the list of publicly listed champions could keep up with. This is not just about chips anymore, it is about building entire platforms. If you want to see where the memory side of this equation is heading, look no further than SK Hynix, which is being highlighted for the fact that 65% of its revenue now comes from the United States, driven squarely by high-bandwidth memory demand. HBM is becoming the bottleneck and the premium product in the AI supply chain. SKY's, the OTC ticker, is the one to watch as that demand profile holds. Micron is clearly riding that same wave. Micron soared after Bank of America issued its highest conviction buy call on the stock. That kind of endorsement from a major Wall Street house does not show up every week, and it sends a signal about where smart money is positioning on semiconductors at this moment. But here is where the AI semiconductor story gets more nuanced, and where you should pay close attention. Intel, the chip giant, is facing mounting pressure. Intel has cut data center jobs while earnings loom, and an analysis out today noted that Intel's AI-fueled rally is now colliding with a difficult turnaround reality. Nvidia leads the charge into a new generation. Micron and SK Hynix are capturing outsized share in the memory boom. And Intel, despite years of promise and capital commitments, is struggling to prove it can keep pace. Earnings could decide the next big move for the stock, but the narrative has shifted. The AI rally that carried Intel much of the way is now being tested by a turnaround story that investors are getting impatient with. Let's talk about big tech and enterprise software, where we are seeing a mix of AI-driven optimism and some sharp pushback. Microsoft struck a deal for Mistral's AI computing power, which is a clear signal that the major cloud players are actively diversifying their generative AI stack beyond in-house development. At the same time, Bank of America enhanced its Erica Assist generative AI platform to help employees resolve client needs faster. These are not headline-grabbing events, but they represent the slow and steady integration of AI into the core operating systems of the world's largest companies. Alphabet's margins were noted as sufficient to support continued AI spending, and separately, Berkshire Hathaway made a sizable new position in Alphabet. When Warren Buffett's conglomerate is making a massive bet on Alphabet stock, it is worth asking whether you should follow. The answer, as always, is that it depends on your horizon. But the signal is not one you should ignore. Now, not every headline is positive in the enterprise software world. Salesforce plunged after Morgan Stanley downgraded the stock and slashed its price target. That is a serious move by one of the most influential banks on Wall Street, and it reflects growing impatience with Salesforce's execution. On the flip side, Firefly's launched an AI sales suite aimed at competing with legacy platforms at a fraction of the cost, targeting its 20 million base of users. This is the kind of disruption that tends to give enterprise software investors another reason to sit up and take notice. Moving into geopolitical risks and legal developments, the broader macro picture has a few more wrinkles. Iran stepped up attacks in a return to war with the United States. This is a significant escalation that has real implications for energy markets, shipping routes, and risk appetite across global equities. Chevron's bull case is being re-examined today specifically in light of these geopolitical tensions and new gas projects. Energy names are not immune to the broader risk environment, and with oil and gas prices always in play, geopolitical headlines matter more than they might on a calm trading day. On the regulatory and litigation front, Oracle faces a $7 billion collateral bill in Wisconsin. That is an enormous figure, and it is the kind of legal overhang that can weigh on a stock regardless of its operational fundamentals. Snap settled a minor addiction case, even as Meta prepares for a jury trial next week. The legal pressure on social media companies continues to mount, and that is a backdrop investors need to keep in mind as these stocks trade. Now let's talk about what the data actually tells us about the market right now. We have 38 bearish signals to just 12 bullish across 10,606 analyzed symbols. That ratio is striking. 38 to 12. This suggests that beneath the AI enthusiasm, the broader technical picture is deeply cautionary. Technical indicators across the vast majority of traded names are flashing warning signs. Overbought territory appears on the bearish side across several tickers with names like BFLX, GDevla, Kitita, and Zasua. Among individual movers, the small-cap stocks posted some of the most outsized percentage moves you will see. DFNS led gainers with an extraordinary 10,042% surge, followed by CCG at over 3,000% and PRPL at over 2,000%. These are not the kind of moves that happen without some underlying catalyst, and they reflect the speculative energy that can surge into smaller names while the broader technical signals stay bearish. On the downside, GVH and WLFC were among the steepest decliners, with GVH down nearly 69% and WLFC down over 67%. On the payments and fintech side, Klarna shares surged 9% on an Apple device leasing partnership. That is a notable cross-industry deal, and it is worth watching for what it says about Apple's strategy in expanding how consumers acquire devices. OpenUSD was raising competition in the global stablecoin payments space, and Visa's compounding trajectory drew fresh analysis. The payments infrastructure layer continues to evolve, whether through legacy incumbents like Visa and MasterCard or through newer entrants exploring stablecoin rails. A few other names worth mentioning as we round out the morning. Tesla widened its Robotaxi rollout ahead of second quarter results, and those results are shaping up to be a critical inflection point for the stock. Danaher plummeted after one segment came in surprisingly soft, and 30M investors remain patient, or at least, demanding, for a more consistent growth story from the diversified industrial incumbent. AT&T earnings arrived amid rampant Starlink wireless speculation, adding another data point to the ongoing debate about how satellite broadband competes with traditional telecom. And Elon Musk issued a warning to SpaceX short sellers, which is the kind of comment that tends to generate headline volume more than fundamental clarity. Game Change Energy was tapped to supply solar tracking systems for Texas data center projects, which is a small but illustrative thread connecting renewable energy infrastructure directly to AI power demand. At the pharmaceutical side, Novo Nordisk suing Eli Lilly over GLP-1 advertising adds a new chapter to the weight loss drug rivalry that has captivated investors for years. So where does that leave us on July 21st, 2026? The AI infrastructure wave is real and it is accelerating. Vera Rubin in full production, Micron on a highest conviction buy, SK Hynix's US revenue profile reflecting HBM demand. But the market breadth tells a different story. 38 bearish signals to 12. Turnaround stories like Intel are being tested in real time. Legal and geopolitical risks are compounding. And if you look at the technical picture across more than 10,000 symbols, caution is the dominant theme. The question for investors today is whether the AI enthusiasm is broad enough to offset the bearish technical signals, or whether this is a case where the narrative and the data are actually telling two different stories. That tension is one of the defining dynamics of markets right now. That is your market news for Tuesday, July 21st. Stay curious, stay disciplined, and I will see you tomorrow.